Hey you guys, I'm excited to be back with you with a new video. My name is Sunny. If you're new to my page and channel, I'm a realtor and a wellness coach, and I just help people move into a new place and a new life. And in this short videos, I've been interviewing experts in the industry of just what's the most important thing for buyers, sellers, and how to do a good and no stress real estate transaction. So I'm excited to have Todd McDonald again with Guaranteed Rate Affinity. And Todd, my question for you today is, if you were a buyer and thinking about a home, getting a mortgage, what do you need to know? What would you do?
Yeah, hey, thanks. That's such a great question, and one I love to answer for folks. I literally helping a really good friend of mine through this exact process right now. And so, it all starts with credit, right? Under the new Dodd-Frank, it's the ability to repay, which all starts with credit. And so I always say, if you don't know what your credit is, there's all kinds of online services that you can go to, but sometimes they're misleading. So whatever your score is online, probably best to take 20 or 30 points from that score. There's some things that you can do, like getting a bank secured credit card is awesome. It's not a debit card, but it's a credit card secured to your bank account. That will really help you out a lot. Keeping your credit card balances below 30% of the limit. So if you have $1,000 limit, you want to be under $300. The more you go up above, over 30%, the less your score goes down. Mm-hmm. So it's really good to keep those balances low. And then one of the things I always say is it's a debt to income ratio. And so you can take your gross payment. So let's say you make $50,000 a year, right? Gross, right? You can take that and divide it by 12. And that is your gross monthly income before the IRS gets their portion. And a good number to use is like 45%. So you don't want to be above 45% with those accounts that report on the credit bureau. Cell phone bills and water bills, those don't show up on credit. Things that show up on credit are credit card accounts, car installment loans, boat loans, student loans. Show up on credit. So you got to count student loans in there. And depending on the type of loan, you may have to use 1% of that balance, right? But you take all those debts plus your new monthly proposed mortgage payment, and you don't want to be above 45% of your gross monthly income. So it's really simple to do. Is you can look at what your monthly bills are on the credit bureau, look at what your gross income is, and then say, hey, I don't want a house payment more than $800 or $1,000 or $1,500, add that into your liabilities, and then come up with a number that's not more than 45% of your gross monthly. It's a great way to prepare.
That's wonderful. I wonder, so with a new buyer, would it be best to just give you a quick call and
Absolutely.
say, hey, we're looking for to buy a house. This is what we're calculating. Am I correct? Would that be something that you would do?
Absolutely. What I tell folks is just call me. That's the best thing, right? Because you may not be prepared, but it's so important to have a game plan, right? Yeah. So I tell so many borrowers and agents, hey, the Smith family's not ready right now, but I think they will be in 6 months or 8 months, whatever it is. But you got to have a plan and work that plan to save up some money, get your credit lined up, check your debt to income ratio, and know your budget. So it's all about having a plan to buy a house, which is the American dream, is to own a home.
Yes. So now we know how much kind of we can afford. How about down payment? Because
sure,
people don't realize, buyers don't realize that you need, or not only the down payment. What I'm thinking is bring to closing.
Yes,
and
ma'am.
It depends on how much you're going to put down. But in addition to that, how much do we need?
So, it depends on the type of loan. For example, USDA has a 100% loan. The VA has a 100% loan. FHA is 3.5% down. Conventional has a 3, 5, 10, 15, 20% down. So they will actually go 3% down. But anytime you don't put more than 20% down, you're going to have mortgage insurance each month, right? So, but in addition to that, every single loan has closing cost, right?
Yes,
So a lot of times people say, well, there's no closing cost if I use a VA loan. There's always closing cost. Now, the seller may pay for it. The lender may pay for it by charging a higher rate, but it's really good to kind of know what those costs are for the different types of loans so that you can kind of know, hey, do I need to save up, or do I need to get a gift for that, or do I need to ask the seller to pay for a certain amount of my closing costs?
Yes, yes. Okay. So that's at least a few thousand.
It can be, yes, ma'am.
My experience. So just knowing that you have to have some cash, not to be completely on the edge.
And you have to set up your escrows, like you have to have a upfront homeowners insurance policy at closing. So depending on what company you go with, it could be $500 or it could be $2,000 that has to be paid up front of closing. And then we set up those payments so that every month you're paying 1/12 of your taxes and 1/12 of your insurance. So with all those costs set up, depending on the purchase price and everything else, with the insurance and the taxes and everything else, you could have $4,000 or $5,000 in extra cost that somebody has to pay, whether it's the seller, a lender credit, or a gift, or coming out of your own savings account.
Yes, let's hope for a rich aunt.
Yeah.
Is going to a gift.
Yeah, gifts are always good, but there's things you got to do to prepare for that too. So I always, when I send out my instruction letter to buyers when they're ready, I say, hey, don't make any large deposits in your bank account because they have to be sourced. And if you're going to pull money from a 401k, which you can, there's certain documents that you have to get. And if there's a gift, there's certain documents you have to do for that. So it's always best to talk with a mortgage consultant or professional before you go there. And by the way, and I know you do this because you're such a great agent, but listening to your agent is so important in that process.
Yes. Many steps.
Yep.
And you miss something, and there the stress comes. Well, thank you, Todd, very much. This was super helpful. I have like 20 different ideas and questions to ask you, so we'll save them for later. And you guys, if you have any questions regarding mortgage, there we'll put the information with Todd's contact info there. And if you have any other questions, reach out. See you soon next time.
Thanks, Sonny. I enjoyed it.
Thank you.